So do you want to be smart or do you want to be rich? Like, you know what I mean? And I'm not saying rich is everything, but in this game, the game is making money, right? Yeah. I knew this stock was a buy when it was at, 50 and then it went to 15, right? I was just early because I'm so smart. The problem with doing good analysis is it'll get you to fight the tape too, right? My analysis tells me that the stock market's overvalued here. Okay, so then what? Now the market goes up more. Well, then it's an even better short, isn't it? And it goes up more and it's an even better short, right? The bear mantra is just such a strong pull. Bears sound smart, bulls make money, right? So it's so much more sexy to be bearish. Hey, the world's going to end and da, 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 da. It's boring to be like, well, actually the stock market's going to go up 8% a year. This is what I think, therefore this is what I'm going to trade. It's just the most dangerous thing in this world.
Welcome to the final AlphaMind Podcast of 2024. And for the final one of this year, we have a returning guest, actually returning for the third time. The guest is Jason Shapiro, who we often get asked to have him back on the show because really the way he talks about markets, the way he looks about markets, his perspectives on markets does seem to fit with so many people keen to help themselves develop and improve as traders. Before we go there, we want to remind you that we have a new program starting in 2025. This program is called the High Performance Trader Learning Program and will be run through our educational partner, the Brilliant Society of Technical Analysts, the STA. This program is not about technical analysis. It's a program which looks all round at trader behaviour within the context of trading. This program is the first ever comprehensive learning program that unifies trading, markets, risk, human behaviour and individuals' own personal behaviour as a cohesive whole, with the purpose of helping them become more productive as traders, to help them enhance their trading performance by focusing on the personal elements for them that are essential for success. To find out more about it, go to the Society of Technical Analysts website, technicalanalysts.com, and there you will find more details about it by going onto the Education and Courses tabs and then scrolling down to the bottom of the page. Now on with this week's podcast.
Welcome, Jason, back. I'm going to throw a question. Let's just start with a question. So I've got a question, Jason, because I know that you've got the crowded market report, and we perhaps can refer to that as we go through this. You must see so many stories evolving from the community around that report, sits around and you've generated. And you've had your own journey of, significant changes of shape, I guess, during that journey over the years and where you are now. What has that community taught you? Have you learned anything new from, those different stories from, I guess, the new people turning up and trading? Have you learned anything from that?
I mean, I've learned a lot through my Discord because we've had a lot of people on there, some of whom are very smart and take a different approach to the approach that I take. So I'm always love to look at that and listen to that and watch that. So I've definitely, in a specific manner, learned specific things. As to have I learned anything general about people's journeys and all that? I mean, if nothing else, I would say the world is an incredible place. And, we have people from I don't even know how many countries, 50, 60 countries. And I have met a number of them. I just last weekend had lunch with 5 or 6 of them. And to tell you the truth, I go in with my typical sour attitude. I was in New York doing something. I said to these guys, hey, I'm going to be in New York if anybody wants to get together. 6 guys show up, and my sour attitude is always like, what am I going to do with these guys? You know what I mean? Like, who the hell wants to spend their Sunday having lunch with me, first of all. But when I get there and I meet these guys and I talk to these guys, I'm always just, it's incredible, truthfully. People, the human spirit, you know what I mean? We have one guy who, he wasn't at the thing this weekend, but I met him in Las Vegas a year ago or so, and he was on our thing. And I mean, he's a Vietnamese guy, and he was a boat person you know, those people that came over as refugees from Vietnam to America and all that, when he was like 2 years old. And now he has like, you know, a life and a family and a good job and all. It's amazing, right? Some of the guys that I met this past weekend were Eastern European guys. And to hear their stories about how they grew up and how they managed to get out of there and how they came here and what they're doing here, it's like, it's incredible. It's really incredible, especially for a guy like me who was, you know, I grew up in the suburbs of, you know, of New Jersey. You know what I mean? My life comparatively was so unbelievably simple. You know, what did I have to overcome? You know, a dad that didn't go to my Little League games, you know, like that's the worst thing that happened to me growing up, you know? So I just think it's incredible. The human spirit is an incredible thing. Is I think the main lesson that I learn when I meet these people and get to know them.
Yeah, and of course, creating the platform to allow that, you know, is it's, you know, you've done that, right? I mean, you're giving reason for these people to come together and you know, learn about each other in a far deeper way than just talking about the market. You know, and I think those stories, like you say, are, you know, super important as we drift into, you know,
it's incredible, and there's so many things that I don't know about, that I'm not educated about, and we have people on there who are, you know, engineers, and people on there who own mining companies, and people on there who are farmers, and people that, you know, are programmers for, you know, AI and all that. So it's like great because I can learn about all these things. Like my view here is, okay, well, here's AI, and we'll have somebody say, listen, man, I'm an AI engineer, and I can tell you that this is really what I'm seeing, you know? So it's been incredible, to tell you the truth. I didn't have any knowledge or any plan for this thing when I didn't even start it. It was started by someone else who asked me if I would get involved, if he wanted to start this thing. And I said, sure. I didn't really think anything of it, but it's really become this incredible thing of a whole global bunch of people with all kinds of different backgrounds. And it's been amazing to watch.
And of course, they're involved in the trading space in some shape or form. And there's always been this sort of discussion around the success rate in the trading space as being, you know, only 5% or 4% are successful and that the rest are suffering. Would you say that that is, you know, reflective of what you see? Is it a higher number or a lower number? Is it sort of 50-50?
I can't really tell as to what these people are doing necessarily. I know a bunch of them do copy trade what I do,
right?
Although I discourage that. I think the majority of them, I would say, that do my copy trade my stuff also do their own trading as well. How they do, how they don't do, you know, there's no way for me to know. I don't see their P&Ls. I'm not like writing down every time someone says, oh, I'm buying S&Ps here. I'm not writing down his name. And you know what I mean? I really don't know how they're doing. I've seen some people make, well, I haven't seen them make, but I've seen them post some very good trades. What that means for how they're doing over time, you know, I really have no idea. You know, I've always said that it's like a single digit number of people that make money in the markets. And I had a few reasons that I believe that. I actually came up with one last night. That's certainly by no means any kind of huge thing, but you know, you have these humongous hedge funds, right? Let's say they've got whatever, $300 billion. Well, if they make money, if they make 15% on $300 billion, that's what, $40 billion? Well, that $40 billion has to come from someone. You know what I mean?
Exactly.
So it's like, you know, that's what you're up against, right? That $40 billion that's going to 20 different hedge funds has to come from $40 billion that somebody else is losing. You know, and that's got to be a whole lot of people because most people aren't trading $40 billion, you know. So I think that's also part of the math of why a small number make money and a large number lose money, you know.
Yeah, and I think there's an expectation of, well, what is enough to make? And, you know, I know that people often glorify, the hedge fund space, but I'm like 2,500 hedge funds globally, and I think year to date they're around about 8.8% return. And I think Buffett is something close to 20. Stanley's close to 30. I think Buffett recently said if you had less than $1 million, you'd probably be closer to 50, but it'd be stock picking rather than doing much else other than that. So I think the perspective of what is a lot and what is enough is a question that some of the people that I've coached have raised the question of, saying, well, how do I know if I'm doing okay? Is 10% return good? I'm just going to put it out there. I've got no idea. I didn't answer it. I don't know.
Can I jump in there and again, just add my bit to say, Jason, again, welcome back to the show. It's great to have you on. We're a huge fan of yours and your work and the work that the team have done as well. It's fascinating because when you said 4 or 5%, Mark, I'm like pushing my hand like yours.
Yeah.
Trying to say
I was generous.
Yeah. I remember seeing a report written a number of years ago, some research done by some guys at one of the Californian universities that did a big research piece on. It was based on day traders at the Taiwanese stock exchange, and they'd looked over 15 years worth of records, which is about 400,000 people. And I did some sort of quick and dirty maths when I was going through it, and it looked like the number was about 1% was sustainably able to make money in the market over several years. Now, the number in any 1 year was closer to 15%. But you've got to remember, it's not the same people every single year.
Of course, yeah.
Okay. So if you actually track it over time, there was perhaps it was around about 1% was sustainably making money over time. And only about a quarter of those were making decent money. And then I think something like an eighth were making really good money. And I think that is a fair proxy for the market and the retail world. And I think you're right. It's incredibly hard to do it in the retail space. And it's why I've got so much admiration for retail traders over any others, because, they eat what they kill if they can make it. And they don't get paid if they have a bad week or a bad month. They or a bad year. I don't get
paid if I have a bad week or a bad month either, by the way. But
or a bad year. When I worked in a bank, and I had a year with a pretty crap performance, I still got paid every month. I still got paid a bonus at the end of the year. Not much, but something. If you work in a hedge fund, it's the same. You get paid, but you get paid a lot of money. So only if you go through 2 or 3 years of really bad performance, you get cut, and then usually you go to another one. So, you really, when you sit outside the center of the market making world, the hedge fund world, it's so much harder. You don't have the close up information on the market. You don't see the flow. You don't have access to the key news and opinions of other people that are at the center of the market. And you don't get paid. You're drawing down on your savings if you have any left.
This is why I tell everybody that asks me, don't do this. And they think I'm being facetious, but I'm being serious. I tell everybody, hey, what should I do if I want to be a full-time trader? I always tell them the same thing. Go to law school. And you know what? Lawyers make a lot of money. So make a lot of money. And instead of buying some mansion, just buy a normal house and take the rest of that money and put it in a trading account and trade on the side. If that's what you want to do. And put together 5 good years. And in the meantime, save money from your law job and then go out and do it. This idea of what you're saying, it makes it even that much harder, right? Because you have to live off that money too. So you can't compound it. So you never really can get anywhere, right?
Yeah.
People don't get it. They think it's this dream, and the dream is truthfully a nightmare. Yeah. Not even talking about, that's if you're successful. Not even talking about what you guys just said, the ridiculously low number of people that actually make it. And I get it. Look, I'm going to be the one of those 1%. Okay, good. Go for it. But even if you are, I had this kid call me today, ask me about raising money. And it was such a silly conversation, quite frankly, because he's like, I have this paper trading thing and I've never traded any real money, but, on the paper trading thing, small cap, something or other, blah, blah, blah. And I make like 3% a day. I was like, all right, bro. I said, the first thing I'm going to tell you is what you should do is if that's what you want to do, you should go work for a prop shop, go get a real prop shop to convince them, show them what your strategy is. But the second you walk in and tell somebody you're making 3% a day, you're done. Okay, you're done. No one's going to hire you because that's 750% a year. Okay, anybody that runs a prop shop that's worth there's anything is going to know that is not real. You know what I mean? And you're going in and saying you paper traded this. I mean, you're going to get laughed out of the building, right? But just from the very start, telling somebody you make 3% a day. You don't. Nobody does. Not sustainable. It's just not going to happen.
We're going to go back to the podcast in a second. Just first, we want to tell you about a new initiative we are doing with the Society of Technical Analysts. AlphaMind will be delivering our first high-performance trader learning program, and it's going to be delivered by myself and Mark Randall next year, starting in March 2025. This program is based on over a decade of successful performance, coaching programs and workshops delivered by us at some of the world's leading hedge funds, some of the world's top investment banks, and several of the world's top energy and commodity trading firms, as well as to serious-minded professional traders, including several who featured in Jack Schwager's most recent Market Wizards book. You can find out about this program by going onto the Society of Technical Analysts website at the link technicalanalysts.com and then go into their education page. As we said, this is a 10-week program delivered on Mondays, UK time, between 6 and 8 p.m. It's going to be delivered live over Zoom. Enrollment is limited to just 25 participants. Now back to this week's podcast. So, the one thing I say, look, if you are committed to do it, learn it properly. Don't, spend 2 or 3 years, play small, okay? Try different things, read a lot, speak to mentors, practice, review. I do actually meet some retail traders and work with some who are incredible and have actually been able to build a business. I think you met a couple of them in Vegas last year, actually.
I actually met one of your people in New York last week.
In New York, terrific.
Yeah, that you help him. He mentioned to me that you help him.
Okay. But I've met some of these guys, and they are fantastic. They're incredible. I'm coaching one guy at the moment. He's an electrician. So he's got a career he can always go back to as well, at the very worst of it, which is a fantastic thing to have. But he's given that up for day trading. But he's not really day trading. He's slightly longer term trading, but setup trading, having setups. And he is brilliant. And he's getting to the point where people are saying, we'd like to give you money to trade.
Good.
And as he says, well, I'm not ready for that yet. I'm still developing my process. I'm still getting to a point of a level of confidence. It's like the other way around. He wants to be sure that he's got it nailed down to a level where he's happy to take money and not give them ridiculous returns, but reasonable returns. He says, I'm going to negotiate.
His chances for success sound a lot higher than most people. That's how he's.
Yeah, but he's spent about 10 years learning it to get to this stage. And he's had an income in the early years from his job as an electrician. He's not done it in a crazy way. He's not gone out and just thrown it all in. And then he's gone to a point where, okay, I'll save some money, I'll try it. And that's worked for about 5 years. And now he's getting to the kind of ready to go to the next level. But it's just a really sound, level-headed way. And the amount of work he does on himself is spectacular. Daily journaling, weekly reviewing himself and his performance.
This is what it takes.
Yeah.
All those things. That's what it takes. People don't. I think you put a thing on Twitter this morning. I thought I saw that said something about like that.
Yeah, the practice one. They just want to practice.
They just don't want to do the work to get it. Like,
yeah, I don't want to practice. I want to go straight to the part where I'm awesome.
Right. So, I mean, okay, why trading is different than anything else in the world I don't know why people think that, but it's not. Anything that you want to be super successful at, right? You got to work at, man. I don't know. I saw a thing about Shaquille O'Neal the other night, and sure, he was born and turned into a 7'1" behemoth of a man, but he still had to work on how to play basketball. He had to work hard on how to play basketball. Even though he was given the physical gifts, he still had to work hard on it. There's plenty of 7-foot people, not plenty, but there are 7-foot people who are not in the NBA.
Yeah.
Trading is any different than anything else. Like all these things that you're talking about, working on yourself. We know that trading is so internally mental at the end of the day, right? Working on yourself and journaling and going back and doing all this, it's such an important part. And if you're not going to do that stuff, you think you're just going to wake up in the morning and start trading away and making tons of money, you're in for a rude awakening.
And that brings me to a question I wanted to ask you. And I think it's got worse over the years. Views have become so polarized, both political, financial, markets, everything, the way the economy is going. And it feels, you've got so many sources or resources or, BS resources, and everyone has an opinion. And how do you stay objective? Because to do this job well, you have to somehow remain objective. But you also must be subjective in order to take a view, take a trade. So how do you...
I get heat sometimes when I do YouTube videos on what my view is maybe on the market, and even in my weekly report. And you got to remember, my weekly report that goes out to our people is something that I have written for myself for over 20 years. It only has become this thing in the last few years, right? But all it is exactly what I did for 20 plus years for myself. But in there, people say I'm like two-siding it. You know what I mean? But I'm not two-siding it. I'm just trying to be able to see both sides of the argument so that I don't get caught up in one here. We know, for example, now, okay, the Trump trade, right? Here it is. That's what's going on now, right? So you can think that Trump is a liar and a scammer and a Nazi and whatever you want to think that he is, right? If you want to. And therefore you will believe that the market is going to go down. But in the meantime, you better be aware that maybe not. You know what I mean? I know it's hard politically to be that way, but what if what he does work? Then you're not going to want to be short. What if we do get this economy booming and without deficits and without, he lowers taxes and he lowers regulations and does all these things and it works, So I like to put both sides of this stuff when I write stuff down like that for that exact reason, right? I don't care. I don't have the time. Like, I don't get involved in the political stuff very much. Because I don't have the time for it. I have to make money in the market, man. You know what I mean? I can't be biased. Like, that may not be the greatest endeavor in the world, but it is my endeavor. This is what I do. I'm a market guy. This is how I make my living. This is how I live my life. So that's what I have to focus on. I can't get involved in, and it's not that I won't have political arguments. Trust me, I will. But they are not going to affect, because we're talking about the future here, right? And we don't know what it's going to look like. We just don't know. Everyone wants to argue about these tariffs. Oh, these tariffs are going to be horrible and they're going to cause recession and they're inflationary. Okay, maybe, but you don't even know if they're going to happen. Like, how do you know all these people that hate Donald Trump love to call him a liar and a pathological liar. Well, then why do you believe him when he says that he's going to do tariffs? I thought he's a liar. Then why are you believing him when he says he's going to do tariffs? And to me, it's because you hate him. So you want to find something that could be negative about what he's doing and focus on that, right? I hate Donald Trump. Therefore, I believe he's going to do tariffs because tariffs are what's going to be bad. And that's going to be the bad thing that he does. But how do we even know he's going to do tariffs? Maybe it's just a big negotiating bluff. We know that's how he deals anyway, right? And what if there's no tariffs? Then what? Then what are you going to say? I went around this whole Thanksgiving, and I was surrounded in Thanksgiving by, I wasn't surrounded, but there were a number of people, as there are just about anywhere you go now. There were a number of people at the Thanksgiving dinner I was at that are absolute Trump haters. And I said to him, listen, just what happens if during his 4 years, these two wars that are going on now end, and the economy booms, and the deficit goes down, and your tax rates are down, and inflation comes down, then what? Do you still think he's the worst freaking guy that ever lived in the world? I mean, what do you think their answer is? Yes. Because they can't get away from it. You know, people just can't get away from it. And that's fine when you're talking politics and you have your political beliefs, but in the market, that's not fine. That's how you blow out, right? In my report this week, I actually wrote it, caught short. The 3 times that I have lost big money in the market, have blown out my accounts, have all come from me shorting the stock market, okay? And being stubborn about it. This is when I was way younger, you know. I was caught short. And now you're caught because you've lost a bunch of money shorting. You don't want to believe it's going to go up. Every time the thing ticks down 2 points, you want to reshort it because you're scared now that you're going to miss out on the short that you've gotten so killed on, right? And I feel like these people that hate Trump this much, I feel like they're caught short. You know, it's like the same kind of psychology to me, right? They hate him. They know he's a jerk. They know he's a thief. They know he's a liar. They know he's a whatever. And they never want to be proven wrong about that. And they're caught short because not only are they caught short, they've lost, just like me shorting the stock market. They've lost. And these are really the biggest arguments that I've had about this is with people that are like this, that right away, they start blaming things on why they lost. Oh, Trump won because the typical American voter is a moron. I'm like, okay, first of all, he won because people like you say that and people don't want to hear that, but that's a whole nother argument, right? But like that's no reason. Why don't you look unto yourself? It's just, you know, it's mostly these, I have a daughter who's 23, and it's mostly these sort of, I always say white girls that are in their 20s that are so like this, right? As they should be. They're in their 20s, right? But I'm like, you have to figure out why you lost and change that. Otherwise, you are going to be under Republican rule for the rest of your life. Okay. And you can sit here and blame it on everybody in America being stupid and all the voters being stupid. And you can blame all you want, but that's not going to get you where you want to be. Right. Just like, hey, I'm short the stock market. Okay. It keeps going up. Okay. I keep losing money. Oh, but that's because it's rigged. We hear that all the time, right?
Yes.
That's because it's rigged. Okay, it's rigged. Doesn't mean that you didn't just lose all your money. You did. So who cares if it's rigged? If it's rigged, then go with it. If you're so convinced it's rigged, then go with it, you know? My daughter and friends are telling me how, like, oh, well, nobody wants to vote for a woman. That's the problem. They're all sexist. They don't want to vote for women, which, of course, Hillary Clinton actually got more votes than Donald Trump the first time around. So whatever. But even besides that, I'm like, well, if that's really how you feel, then what you have to do is not put up a woman, you know, and then have some guy win and then let him appoint women to all the important posts, right? I'm all for it. But, you know, if that's really what you believe, then put somebody up that you think can win. Otherwise, this is all a waste of conversation. You know, what's the point? If you don't get your person in to do the things that you want them to do, then what's the point? You're caught short. You know, I feel like these people are all caught short.
Mm-hmm. And do you think global press and these channels have got anything to do with this sort of psychology? Because I remember when the Dow went down below sort of 29,000, I mean, it was like end of the world. It was, we're in for a major correction. Bear market. And certainly in the UK, I mean, if the UK can talk negatively about anything, there goes all over it. So it does kind of prime the general population for the downside rather than upside, because certainly over here, very rarely do you talk about growth and dynamics of bull market. It's like whenever it goes bear, it's like significantly bearish. I think people people catch on to that. People catch on to that for the wrong reason, and that translates through to some of the general opinion and decisions. So it's imbalanced in my view, what's coming at us. So tuning into the right channels or tuning out of the wrong channels is perhaps part of the strategy,
The bear mantra is just such a strong pull. Has always been, and I think always will be, such a strong pull. It's so much more interesting. They always say bears sound smart, bulls make money. Right? So it's so much more sexy to be bearish. Hey, the world's going to end, and it's boring to be like, well, actually, the stock market's going to go up 8% a year. That's so boring. Oh, we're about to drop 80%. This is tulips. That's so much more interesting. And you see it. The things that get all the views is all the bear porn stuff is what gets views. So
it's true though, isn't it? I saw someone put the thing on Twitter today about the Dutch tulips and the stock market, and I'm like, wow, there is an entire industry around that of people who put that on almost on a weekly basis about something.
Bear porn. I saw that tulip thing. It didn't even make sense, by the way, what he said. I
didn't read it. I'm just okay.
He said something like, a tulip cost as much as a mansion in Amsterdam at the time. And it was a tulip cost 150 times what a craftsman's salary was. Okay. But then he also said a tulip in today's dollars at the peak went for $25,000 US. So you're telling me that a mansion in Amsterdam sold for $25,000 US in today's money? That doesn't sound right to me. You're telling me that a craftsman made 1/150th of $25,000 US in a year in today's money? That doesn't sound right to me either. So I don't know what, how these people are, man. It doesn't, the facts don't matter, man. The views matter. So just put something super bearish on there, tulips, blah, 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 and you get the views, right?
We're going to go back to the podcast in a second. Just quickly to tell you about a new book that AlphaMind Stephen Goldstein had published earlier in 2024, Mastering the Mental Game of Trading. This book has been widely praised in the market. The book is available on Amazon and all good book retailers. It is Mastering the Mental Game of Trading. We also want a quick mention to our educational partners at the Society of Technical Analysts, the STA, and we are delighted to be able to promote and offer our listeners a discount on their brilliant home study course. If you want to know more about that, go to our website alpha-mind.net and scroll down on the page where there is more information about this offer. That's the Society of Technical Analysts Technical Analysis Home Study course, which has been produced by some of the world's leading technical analysts. Now back to the podcast. Do you know what's fascinating about, I know, your approach, okay, it is, I think what we're talking about here is opinions, views, analysis. None of it matters other than how you take advantage of it as a risk taker and how you manage your risk, how you read liquidity and sentiment. I've, through this occupation of being a coach and having written a book and explored and thought long and hard about my own background, one of the realizations that came to me during that whole process. So I was a trader for 25 years, but halfway through that, I had a coach. And that coach, going through that experience with a coach, really changed the way I approached my job. I really started to look inwards. And you said something earlier on about don't look outwards, look inwards. And for the first time in my career at that point, I started to reflect on who I was, how I engaged with markets and risk, how I did my job. And now when I look back on that 25 years, I think with the first 13 years, up till that point, of me having a coach, I would call myself an analyst who thought the answer came through the analysis. Okay. And I was an analyst who traded and tried to take risks. And sometimes I got lucky. Sometimes things worked. Other times I was almost trying to hide or avoid it. After that, though, the years after that, I became a risk taker who used analysis. And that's where everything changed for me.
I think
Everything was about how I took risk.
that's 100% it. You know, the analysis part is the intellectual part. It's interesting, you know, but at the end of the day, you're trying to predict the future, right? And the problem with the market is that is theoretically already discounted in. So you're trying to predict the future. Like I can come in tomorrow and say, my prediction for the future is the sun's going to rise tomorrow. And I got a pretty good chance that that's going to be the case, right? But how am I going to make any money off of that? Because nobody's going to bet against it. I would have to give somebody, $1 billion to 1 to bet against that, right? So I'm never going to make money off of that because the world has discounted in the fact that the sun is going to rise tomorrow, right? I feel like. And it's the same thing with the market, right? You do all this analysis, but you're trying to predict the future better than the market. And the market is the rest of the world. So you're trying to predict the future better than everybody else combined because that's what's in the market price, right? How is that possible? And it's very hard for people to understand that because they want to believe that it's about, doing good analysis. And I just don't think that it is at the end of the day, And the problem with doing good analysis is it'll get you to fight the tape too, right? My analysis tells me that the stock market's overvalued here. So I said a year ago, okay, so then what? Now the market goes up more. Well, then it's an even better short, isn't it? And it goes up more and it's an even better short, right? I think that's the problem with all that, I do analysis. I try to do this stuff all the time, but I'm doing it backwards. What analysis would there need to be for the market to do this? So that at least I can justify in a way, what people will think then. If the stock market is to go down 30%, then what will the world look like? What will people be thinking then, right? Is really how I try to do it rather than this is what I think, therefore this is what I'm going to trade. It's just the most dangerous thing in the world. And that's what in this world. And that's what kills people because in everything else, that's not the case, right? And everything else, conversations that we have about whatever, that's what a conversation is, right? There's no discounting mechanism to it. Hey, did you see this movie? Yeah. Did you think it was good? Yeah, I thought it was great. The acting was good. The writing was good. Oh, well, I thought the acting was kind of shit and the writing was kind of shit. The directing, that's what a conversation is, right? You have your opinion and you make your points, right? But with the market, because of the discounting mechanism, it doesn't really matter if your opinion's right or wrong. It has to be more right than everybody else, which is over time, I would argue, impossible to do.
Mm-hmm. I was
you don't even know if that's why, right? Oh, I'm bullish the stock market because of this. Okay. The stock market went up. Oh, see, I was right. Well, maybe you were right. Or maybe the stock market just went up anyway. You know what I mean? Like, oh, I got long the stock market because I thought Donald Trump was going to win the election. Okay. Is that why the stock market went up? Maybe. Or maybe it was already going up. It's been going up for 2 years before he won the election. So maybe it's just a bull market, So
yeah, interesting. I was reflecting something similar to a client recently, and I sort of said, well, given my experience, I've never ever seen an analyst become a trader in terms of someone
not a successful one anyway.
No, well, I had actually seen the shift, and I've been through some numbers in terms of people that are in the research side, research teams. Did any of them ever get to trading? I don't even they didn't get the invite. I think there is this thing about overthink and about pulling the trigger, having enough information to make a decision and being comfortable with that and being comfortable with what you don't know, and rather than looking for 100% confirmation, which you'll never trade.
We had a guy on our Discord tell a story one time about he was a broker that covered hedge funds, and he had this client who was a younger guy, 25 or so or something, that was very, very well educated, Ivy League educated and all that stuff. And he said, and he wasn't making any money as a trader. And he said to the guy, the problem with people like me, people that went to Harvard or whatever it was, because we're so much smarter than everybody else, that I see things before everybody else. So I'm very often early on my trades. Like, okay. So do you want to be smart or do you want to be rich? Like, you know what I mean? And I'm not saying rich is everything, but in this game, the game is making money, right? Yeah. I knew this stock was a buy when it was at, 50 and then it went to 15, right? I was just early because I'm so smart. I see things before everybody else. Okay.
It's interesting. It's interesting. I have seen analysts make it as traders, but they have to go through possibly the most challenging adjustment. It's like they have to unlearn what they did and kind of relearn what they're doing. And I've been through some really interesting coaching programs where I've helped people make that adjustment. But it is just such a different game. And I always remember the guy who I think was the best fundamental analyst I ever knew. And I mean, he was extraordinary. He really did his homework. And I asked him, have you ever thought about being a trader? And he just said, no, I'd be a terrible trader. I said, I love doing analysis. That's what I love doing. So I'm staying in this kind of lane. He didn't have, he didn't have any illusions about being a good trader. And he, the other side of it was, he'd lose all his objectivity when it becomes, that's what he was saying. He would lose his objectivity that makes him a good analyst. So, you've got to be objective to be a good analyst. You've got to be objective to be a good trader in both those occupations or jobs. If you have too strong an opinion, and I love Peter Brandt's, comment about this, strong opinions weakly held, that idea that, you can have a strong view, but don't attach yourself to it.
And listen, it's very, in my view, very smart of that person to know what lane he's in. There's nothing wrong with being an analyst. That's a profession. It's a skill. You know what I mean? I couldn't be one. There's nothing about traders that is so great. In fact, it's horrible. It's a horrible life to be a trader. Yeah. So if you enjoy doing analysis and you're good at it, then do that, right? Work with a trader. Here you go. Here's my analysis. Here's what we should do. Own this stock. Here you go, trader. Figure out when to buy it. Figure out how to size it. Figure out what the risk is. That's your job. Here's my job. Here's your job. Let's do it together. If I'm good at my job and you're good at your job, well then, hey, maybe we can, let's make lots of money.
Yeah, and that's a great thing. But, and again, it comes down to that side of it. If you are a trader who's over-reliant on analysis, it's I bet your bottom dollar you're losing money or struggling because you're not thinking about your risk. What you described is an analyst giving a report or a view on a stock, and then the trader sort of, do I want to be long with this risk? Do I want to be short of it? Maybe it's a great view, but maybe everyone else in the market's got the same view. And therefore, the upside on a positive story is limited, and the downside on a negative surprise could be huge. And that's the choice you have to make. That's where the opportunity might be.
Yes, that's how a trader thinks. What you just said.
Yeah, absolutely. Yeah. So it's sort of realizing the difference between the two, and both can be right because in the long term, the analysis can be right. It just needed the market to kind of unwind some of the bullishness. The position taken, which is, I guess, what crowded market is all about.
It tries to be, yeah. That's what we try to do. I'm not really doing a lot of fundamental analysis on my stuff. I'm letting everybody else do the fundamental analysis, and then I'm just judging whether that is too in the market or not.
Yeah,
and if the market is reacting how it should to the incoming fundamental news.
One of the things I'd love to ask you is, this year, every year's obviously different, and I think we've had, 30 years of markets in the last 4 years with everything going on. This year's been, when I speak to oil traders, for example, it's just been caught in this sideways, up and down, and not really going anywhere. And some of the currency markets have had a lot of that, apart from August this year. How, as someone who trades off that momentum or overbought momentum or overcrowded positions. How do you look at that when you're involved, sort of trying to maybe figure out these sideways markets? Do you just step back and wait for some clarity?
I sit back and I wait. Yeah. That's what I do. I mean, we had some good, you see like the currencies, but truthfully, I had some pretty good currency trades this year, more so than most years. I mean, just as early as recently as late September, the dollar was hated, right? And then all of a sudden now it's loved, right? Yeah. 2 months later, it went from hated to loved in 2 months. So when it was hated, I was able to catch some long dollar type trades, short currency trades. But earlier in the year, I had caught some short dollar trades. So to me, this year, at least from the way that I see things, it was pretty typical, to tell you the truth. And my returns look like they're going to end up right in my range of where I like them to be. Right. I had some. I didn't have a lot of trades this year, quite frankly. I had less than usual. I went the first 2.5 months. I had no trades, so I had to sit here and do nothing for 2.5 months, which isn't easy to do, but it's what I do. I wait for my process to get a chance to do something, and when it hits, I do it. I didn't make any money long the stock market this year. I didn't have any long stock market trades because I did catch the stock market the year before because people were so bearish with the recession thing and they were so short. And so I was able to get long there. But once it went up enough and people got kind of neutral on it, I'm out. So this year, I feel like it was a good year because I did. It's not over yet, but I'm like a few percentage points above what my expected return is for me. And I did all that without being long the stock market at all, which I feel good about. I feel bad about because long the stock market was the easiest trade, but who wants the easy stuff, right? But yeah, I was able to do that without the long stock market trade at all. So I feel kind of good about how the year went based on that. So to me, it was just a very sort of pretty typical year, quite frankly.
Yeah, that's a good example of patience, though, because a lot of people struggle with that. Well, you're laughing, I know. That is the big thing.
I do. Everybody does,
Yeah. Yeah. Are you sitting there looking to try and pull the trigger sometimes and then holding yourself back?
Oh, consistently.
Yeah.
Consistently. If I have nothing going on, I'm looking at these markets all day. I just sit here and I paper trade, literally paper trade. I just write shit down. Here, I buy crude here, I sell crude here, I whatever, just to stop myself from actually doing it.
Yeah. Was that a big difference from earlier in your career?
Oh, yeah. It's a 180-degree difference.
Yeah.
Yeah. I mean, I've always said, though, like I have the advantage, a little bit of the advantage now, because I'm not, like you say, one of these people that is living off of that. You know what I mean? Yes, I only get paid if I get paid, right? I charge my clients zero management fee and then a higher incentive fee. So I only get paid if I make money, but I don't need that money to live anymore. I'm old enough. I've saved money so that I don't need that money every month or every quarter or even every year to live. You know what I mean? So I have that advantage. I also have the advantage of my clients have hired me for a very specific reason because I have good negative correlation to the other things in their portfolio. That's what they're hiring me for. I always say that. I mean, my good looks gets me to a certain place. On top of that, they're hiring me because I offer them negative correlation. So that's my job to do. So if there isn't anything there, they're not going to get mad at me. Like as it turned out, luckily, the first 3 months of the year when I had no trades on, trend following was killing it, right? So their trend following allocation was killing it. And I'm supposed to be their anti-trend following allocation. So if I'm flat while their trend following allocation is killing it, I've done a pretty good job. Usually it's like if trend following makes 10% and I lose 3%, I'm good. And then trend following loses 10% and I make 10%. That's what it should look like, right? In this particular case, trend following made like 15, something 20% in the first few months of the year, and I was flat. And then when trend following gave it back later in the year, I made a bunch of money. So as it turned out, it was great. That's what my job is for my clients, right? So I have that advantage in terms of being able to sit back and do nothing. Because of that, I know what my job is, and I have to do that job, right? My job isn't to sit here and trade. My clients are going to freak out if I didn't make any money this month, So I kind of have that advantage over, I think, people that are here I have to make money every month because I have to pay my bills. They can't just sit back on their hands and do nothing.
Yeah.
But that's, in my view, all by design. The advantages that I may or may not have all by design. The fact that I can live for a while without making any money is by design. I've saved my money so that I could do that. Everything that I've done and everything around me in my life is based around being able to successfully do what it is I'm trying to do. So.
Can I ask if someone said to you, Jason, tomorrow, we want you to just be a day trader, okay, and short-term horizon stuff, and of the market signals that are evolving before the stuff that the way that you observe and are curious about the market, would that get you through a day? Do you think? Would you feel comfortable with having that type of role force back on you again?
No. If someone ever said it to me, I'd say you got the wrong guy.
The wrong guy. Yeah.
You got the wrong guy. First of all, I'm not a good day trader. And second of all, I can't at this age live my life like that. Sit here and day trade and all that stuff. Are you kidding me? My poor wife and everybody, they have to put up with me. They have to put up with my moodiness enough, much less the every day of the volatility and the luck involved. There's no way I could do that.
Well, it's true, right? I mean, when you look at that, you just think it's got these people that have got to have a zero position by the end of the day. That they've got lag to market. They've got limited amount of intelligence. Yet they've committed to this world to be there, or at least they're living. And if they're smart, they've got a normal job. But it's like trying to trade with your arm tied behind your back. I just can't see how.
Well, that's why, like you said. Over time, how many make 0.5 of 0.5?
Yeah, that's where the failure lies, right?
That's doing it. That's why. They have so many disadvantages going in, forgetting about the fact that they're trying to make sense of what is essentially a random market anyway.
Yeah.
Even before they even get there, they've got a million disadvantages going in. So
isn't there something about where you sit? There's something about where you sit. If you sit inside a large prop firm, there's loads of flows and loads of traders trading around doing that, and you can sort of get to see where that intraday action is. You see that in FX in banks. It's not easy, but you can squeeze some out of it. But if you're doing that FX on the outside as a day trader without all that noise and that flow and that liquidity information, it's going to be incredibly hard. So I think where you sit is really important.
Yeah, for sure.
I mean, I'm sure you have too. I've seen studies on like the FX thing and the bank's P&L on trading FX. It's all flow. They have orders come in from their corporate clients and they front run it.
Yeah.
That's where they make all their money, right? And I think I saw one where it showed that their actual P&L is less than the P&L they make just on those trades, right? That was the famous study that came out about that, right?
If we
loses money. Their front running makes money. You know what I mean? Their market making makes money as it should, but their trading doesn't. So
I don't know if I ever shared that story with you. If we go back, it's probably about 20 plus years. So this is an old boy story a bit, but it highlights that. I was talking to the head of FX trading at Citibank when they were the biggest FX trading bank in the world. And he told me that, we have about 3 guys on every major currency, 2 people on every currency outside of that in the world that's tradable. So they had a trading room floor the size of a football pitch, just trading FX, day trading FX. And because they made prices in everything, in every size, literally everyone came to them. Every market flow was going through them. And he said, our presence is what makes the market. It's actually the positioning of the guys on the desks that loses the money. But if they're not in the market positioning, we don't get all that flow. And that's what the big thing is. It's, and that's their game. That's just a beautiful example of it. They are the house. They are the casino.
Yeah,
everyone's going into them, and that they just trade those flows. But when they try and take a position, that's the danger.
Yeah, right. So this is what people are trying to do.
And without those flows, you can't do it as a day trading. I mean, unless you've got a setup, a real great setup system that somehow beats the algos. I'm not sure where you do that as a day trader in FX.
Yeah, something I would never be able to answer. I don't know how you could do it. I don't know how you could do it. Maybe someone can. If they can, God bless them. But I wouldn't know how to do it.
Mark Randall. Over to you. Over to you.
Well, I mean, I think we've got to be grateful for what Jason's created in terms of this community. A sense of giving back, I think, the value you've picked up, but also encouraging people to look a bit more differently at trading, but being realistic about it. I think anyone that can form a community is good news. There's not enough of these communities around the space, and there's not enough people that are bothered to actually join a community. They think they can get on with it and do it themselves, and pick up tips from the hairdressers or wherever their other trading buddies are. So I think if you are in this space, if you are looking to learn a bit differently and pick up things from someone that's really created something or worked on a different model to most with this contrarian sort of modeling, then I think it's subscribing to the Crowded Market Report is something that I think is really, really important because with it comes this community and these Discord conversations that Jason's triggering that are absolutely vital. We just need these communities.
I think that's
super important.
I appreciate that, and I think it's when I think about what our thing has become. Again, there is no plan to this, but what it has become, you don't join, in my view, because you think Jason Shapiro is a trading god that's going to make you rich. Okay. If I have a strength, it's in my ability to maybe look at things from a very contrarian point of view. So maybe you don't want to be contrarian, but I'm at least, from me, giving a point of view that, hey, maybe you might want to think about because it's different than what other people are saying. Okay. And that's always valuable. Whether it ends up being right or wrong is up to you to analyze, but at least it's a different point of view, right? One thing I think I'm strong at is offering a different point of view. But the community part of it has really, I think, become a big value for people because we really have, in fairness, tried to make it that way. If someone's on there to be a wise ass and someone's on there to prove, whatever, we kick them off. I don't care. We just kick people right off. We've kicked a few people off for just being jerk offs. And so it's actually developed a bunch of some really good, I see people on there getting together and working together. And hey, I'm looking to build a systemized thing. And then this other guy's like, oh, well, I'm a programmer, and they'll get together and they'll work together. And
fantastic.
That can only add value to people, right?
Yeah.
And there's threads on there that have nothing to do with me. I don't trade Bitcoin or whatever or crypto, and there's guys on there that are active in crypto and they talk to each other. That can only help, right? So that's kind of really why I think it's become valuable, not the whole idea of Jason Shapiro is a market wizard and so we're just gonna do what he says to do. That's a terrible idea. I think I do add some value, and then I give this different viewpoint, which is always valuable to people, but the real value has become the whole community thing, I think. So I think your point is valid and appreciated.
No, I think, and we're very grateful to see it. and for it to see it expanding as well. I loved, I think one of the very earliest sessions we had with you, I think your quote was, "You're looking to take advantage of the emotional flaw in others." And I think that's something, this different way of thinking, I think covers that. So yeah, it's been a delight.
Was that trade the fade? Was that the quote?
Don't trade fade.
Don't trade fade. That was it.
Yeah.
Don't trade fade.
Yeah.
Well, listen, this is brilliant. Again, we're going to put all the links to Crowded Market Report on the notes for this show. So if anyone sort of wants to check out Jason, who doesn't know him, and wants to trade out Crowded Market Report and the community, do look on there. We'll do that at the end. Jace, it's great having you on. I mean, it's, we just love how real you are.
Always great talking to you guys.
Yeah.
Love your book too, Steve.
Oh, thanks a lot. Thank you.
And a lot of people on our Discord have read it, have suggested it to each other and read it, and everybody really, really likes your book.
Oh, that's great to hear. I should put this at the front of the show, this bit.
No, I mean, anybody who's looking to get better at trading clearly should.
Yeah.
It's a book worth reading. There's a lot of trading books out there. Some are good, some are not. But I think that me being a trading psychology guy anyway, I'm biased towards that type of stuff. And I think you really did a great job of covering a lot of that stuff.
Oh, great. Thank you very much. I really appreciate that.
There you go. Well done, both of you.
Well, listen, have a great end to the year. Great Christmas and New Year.
Yeah.
Thanks.
Have a fabulous Christmas, yeah. And
I don't know if there's a limit to how many times you guys will have somebody on, but always happy to talk to you guys.
We'll figure out a date.
We always get great feedback, so it's and like I say, it's just a pleasure to have you and hear your views.
Awesome.
Yeah.
Take care.
Appreciate it. Thanks, Jason.
Thank you for listening today. Again, thank you to our podcast partner, the Society of Technical Analysts. Do check out the offer with regard to their brilliant home study course. If you are interested in understanding more about yourself as a trader, do check out my new book, Mastering the Mental Game of Trading. In the meantime, we wish you the very best of luck and look forward to you joining future episodes of the AlphaMind Podcast. Goodbye.